the most simplest of questions, but I wonder if you've actually considered this for yourself. Are you an entrepreneur or an investor? And is there even a third option where you're both? Today's guest, Buck Joffrey, brings us into his world of becoming a surgeon and immediately being faced with this idea of what is this whole world of entrepreneurship? Russ, what did it make you think about?
I felt like as he talked about making this transition out of being a very, 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 very highly paid professional, and I connect with that, right, on so many different levels, having to leave that space or wanting to leave that space to do something else, but not knowing exactly how. And the way that he did it probably resonated with me more than you, because he was just like, okay, I just told the world a year ahead of time, a year from now, I'm done. I'm out of here. I'm going to be moving. And he's like, so then I had to figure it out. I just had to figure it out. And I think for so many of us, we need to create a catch for ourselves. At least that's the way I would say it, a deadline, some accountability to what we want to do. And if we just keep planning, we might not do it. But if we go out and tell the world, we set a time that everybody else knows is going to happen. In his situation, he bought a house in a completely different state. And he's like, I'm moving over there, so I can't keep doing the thing that I'm doing now for work. I'm going to have to be doing something else. That created a must-solve situation. And I think for so many of us, if we would apply that into our world in so many different ways, it might be like, hey, I need to build my first passive income stream, but I don't know how. What do I need to do? Well, maybe the first thing I have to do is schedule a 15-minute call with one of the coaches at what'swhatwallstreet.com/free call. Yeah, that's a shameless plug right there, Stallion. Maybe that's the first thing. I have to schedule that call. Maybe I don't know exactly what I need to ask them, but I scheduled a call to do it. Maybe I say that I'm going to take the investor DNA and I go ahead and do it. Maybe I tell somebody in my, friend group, hey, at the end of next year, 2024, I'm going to have $1,000 a month in passive income. Ask me about the $1,000 a month by the end of next year. Create some level of accountability, some catch, some deadline for yourself that forces you to do it. Maybe it is leaving your job. Maybe it is moving to a different state. Maybe it is building that first passive income stream or learning who you are as an investor or whatever it may be. Create accountability by sharing it with the world.
I totally agree. And if you are hearing us talk about this and you're like, yes, this is exactly what I need to do. I don't know where to start. I don't even know how to draw that line in the sand. This episode is for you. And we're here to walk you through the process. Go to wealthwithoutwallstreet.com/free call. Now let's dive in with Buck Joffrey.
Welcome to the Wealth Without Wall Street podcast, your guide to understanding how to get out of the Wall Street rat race and start your own mailbox money lifestyle. Now, don't let these handsome Southern draws fool you. These financial minds are teaching our country to enhance savings, increase cash flow, and create passive income, all without the help of Wall Street. Are you ready to break through? Now here are your hosts, Russ Morgan and Joey Murray.
Wealth Without Wall Street tribe, get ready to understand the wealth formula with our good friend, Buck Joffrey. Buck, so glad to have you in the studio today.
Thanks for having me, guys.
Man, it's always a pleasure to spend time with a doctor, right? We've had a few doctors on here. We have a self-proclaimed doctor of financial medicine that comes on our podcast on a regular basis. But you're a surgeon, a cosmetic surgeon, neurosurgeon, and I've kind of lost my ability to go deeper on that subject of science. My wife was a doctor, and she and I never got any deeper than what I could watch on TV there. But being a surgeon, you finish your training, and you said that 1 week after training, you read this book that Robert Kiyosaki had written called The CASHFLOW Quadrant, and it changed the way that you look. I'm really interested in what you learned from that and how it changed.
Well, I mean, I think the starting point is where I was at, which was, as an A student. I think, if your wife is a physician, this is probably something that's familiar to you. When you're an A student, a lot of times, as Robert Kiyosaki talks about, A students work for C students and B students work for the government, right? But why do A students work for C students in the first place? And the reason for that is that A students generally just have their heads down and they're good at what they do. And there's a constant Pavlovian feedback of praise, right? So there's this constant, you're doing great. You're awesome at this. And so why in the world would you get off that train? And I was one of those guys, right? So I was good at school. I was good at college. I was a biochemistry and molecular biology nerd. I went to medical school, and then I started a neurosurgery residency. I mean, I was like, the sort of quintessential nerd that was climbing the nerd mountain, right? And most of us in that space don't want to get off, and it's not because maybe there's ways to make more money, but in our heads, we believe we are the top of society, right? And because we're being told that constantly. And so that's where kind of I was, and I think the element of figuring out I was an entrepreneur happened when I was about a week out of, as you mentioned, out of training. And I got married the day after residency was over. And I went on my honeymoon in Puerto Vallarta. And on the way back, I was literally just looking for something to read. And it happened to be that there was like 3 books in that Mexican airport, and 2 of them were with like guys with long hair and no shirts, and one of them was called the CASHFLOW Quadrant. And I had no interest in any of them really, but the least painful one sounded like the CASHFLOW Quadrant. I had no interest in money. I had no interest in investing, no interest in anything but academics, and I saw myself as a future chairman somewhere. I read the CASHFLOW Quadrant on the plane, and it was electrifying for me. This is a book by Robert Kiyosaki, as you know. And I came off of that plane a completely different human being. And and it sounds ludicrous, but it's true. I completely was a different person. And I realized I was an entrepreneur. And I realized that what I had been missing, because I was so good at what I was doing, was this entire world outside of planned curriculum, which is to create your own destiny, to create your own business, to create your own wealth. And I just found that incredibly liberating. And as my friend Tom Wheelwright, who was my CPA for a while, and still an advisor for me, said, ultimately he described me as an entrepreneur who happens to be a doctor, because that's basically what happened. I, from there, just launched into, I had a business that happened to be cosmetic surgery, but then quickly sort of pivoted into multiple other businesses and ultimately into a real estate private equity business, business in, some of the life insurance stuff that you guys do. I just did a number of other things, but ultimately it had nothing, a lot of it had very little to do with medicine. Now, going back to that comment about A students working for C students, because I know you have nothing prepared to ask me, so I'm going to keep going.
Well, I actually have a question.
Yeah, no, go ahead.
So here's everybody, if you have read the CASHFLOW Quadrant, I'm curious. I don't want to just assume. What was it about that book that stuck out to you that you're all of a sudden, wait a minute, I am an entrepreneur. I just didn't realize it. Like, what was it about the book?
I think that's a really good question, because a lot of people, when they read Kiyosaki, the first thing that comes to their mind is, man, I should buy some real estate. Yeah. And that's not where I was. I looked at these quadrants and I said, wait a second, like, I don't have to be in that W space. And this self-employment thing sounds pretty good. And this business thing sounds pretty good. And this investor thing, well, that's completely different, right? The idea of being taxed different was really interesting to me. And I should say that this was coming at a time where I just finished residency. I was kind of burned out. I was very academic. I wrote tons of papers, I was one of the authors on the definitive neurosurgical chapter on cerebral arteriovenous malformations, whatever. I mean, this is the guy, this is who I was, right? But I was
Russ actually wrote something very similar, but yeah, go ahead. Yeah, that's a side point.
the yeoman's textbook of neurosurgery. The point being that like I was in a space where I was kind of burned out already, and I was looking for a different world. And I think Robert just kind of put it out there for me as this is what other people are doing. They're creating their own world. And that's what I think got really exciting to me, is a world outside of this narrow box that I was thinking in and that I thrived in. And
I want to ask this question because a lot of times we make the assumption that we need to be in a community of other people that are doing that thing that we want to do in order for us to really level up. And being in a world of medicine, right? There's very little business taught, right? And I've talked to plenty people in different departments in the medical school, the dental world. They're like, our job is to help people get out past the boards. Right? They learn business once they leave us. So you're typically surrounded around a lot of other people that didn't know any more about business and entrepreneurship than you did at that time.
Yeah.
So I'm really curious, while you got this insight, how did you grow that? How did you grow it to be to where you could go further than the surroundings that you had around you? Obviously, you're around successful people, smart people probably making a lot of money just because of the professions you were in. But from a business entrepreneurship area, how did you really grow that?
Let's go back to this concept of A students working for C students for a second, because I think that maybe will help explain why others generally who do this don't tend to have my academic pedigree. And this is a conversation. I had this with Tom Wheelwright the other, a few months ago, where, we were talking about this whole A students working with C students. And I said, Tom, Robert Kiyosaki says that, but the one thing that he doesn't mention is why that is. And the reason I think that is, Tom, because Tom was an A student too, right? And I said, the reason is because those C students, they had nothing to lose. We had everything to lose, right? If you are not a big success in your own, in what you're doing, you're not tied up into it, right? So you're more apt to go and try some other things. Right? That's really what it is. Now, so that's what I think was going on. Now, so the question is, what was it in my situation that made me apt to try something different? And I think there's two answers to that. One is that I was kind of burned out and I wanted to do something different anyway. But the other thing is, frankly, like, I think I was genetically wired to be this kind of, my dad's an entrepreneur. And I just always kind of rejected his way of being as like, not being sort of a higher form. I thought, he was a real estate guy actually, and he kind of a little bit of a slumlord, frankly. And hey, but it did great. He did great in that space. And I just never wanted to be that guy. But I think there is something about entrepreneurs sometimes when you that there probably is a little bit of a genetic component of it too. Let me give you an example of that, by the way, which I think is a good one. Do you guys know George Newberry?
We follow the name a little bit, but yes.
So George is an interesting guy. So he did this American homeowner, AHP title, whatever. He's got like 5 million companies. He's one of the most interesting sort of dynamic entrepreneurs that I've ever met. He's a really interesting guy. As it turns out, George Newberry has he's Argentinian, and if you go to the airport, I think Buenos Aires is the George Newberry International Airport, and that is actually George's grandfather. And as it turns out, this guy was like a daredevil, and he was like he was a pioneer in aviation. Ultimately, ended up crashing and dying, but he was. I mean, that's basically an entrepreneur, right? Somebody who's looking for an excitement. So
not the crashing and dying part, but the excitement.
Well, we have our own crashing but there's usually not death involved. Usually there's not death involved. Usually there's not. But there is a parallel there. And so when I talked to George about it, because he and I are both wired kind of the same way. And he had a great comment. He's like, entrepreneurs are, for entrepreneurs, success in business is it's like, it's the game, right? It's the entertainment. It's what keeps us going. And the way we measure success is is by how much money we make. That's a measure of success. That's like keeping score. That's how we keep score. That's not the end game. That's telling you if you're doing a good job or not. And I really resonate with that. And so anyway, so that I think I was just kind of wired that way too. And I should point out that I am not one of those people who who's out there telling people that everybody should do what I did. I highly don't recommend this. If you're not wired this way, it's not a good way to be. It's really not. It can be a wild ride. For me, it's turned out to be a very good ride. It's been a way for me to, do better than I ever would have as a doctor financially. It's been a way for me to help my fellow physicians and high paid earners to do certain things that they may not be getting great advice on or whatever. But it's not like I'm out there evangelizing the entrepreneurial thing. So
I do find that interesting, right? My wife was a dentist, and there were several of her close friends that went on to medical school and became oral surgeons and have done really well. 7-figure incomes, and they are right there squarely in that S quadrant, right?
Yeah.
They're working for themselves, and the times where everybody is off, where it's summertime and winter break, well, that's the time where they're working the hardest, because that's when all the kids are out and they can start yanking wisdom teeth, and they're not able to travel, not able to do things, but they make a lot of money. So it's interesting that you would say that by getting out and doing some of these other things, you've actually created more income for yourself, more wealth for yourself, because I think a lot of them would be like, well, man, I'm going to make the most amount of money just doing the job that I'm doing.
Yeah.
So talk a little bit about some of those things that you did early on when you actually started applying what you were reading in that book. I know you said you built some different businesses. Talk a little about that for those who haven't followed the Wealth Formula podcast and so on. I really want to make sure everybody kind of catches up to speed.
But for me, so it started out, what I ended up doing was, I started my first business outside of training. I just went straight for, I was a cosmetic surgeon in Chicago, and rather than, wait 20 years to build a practice, I went straight for it. I took a bunch of loans out, started marketing like crazy. And before you know it, I had $1 million a year marketing budget. And I was the busiest cosmetic surgeon in Chicago within like probably 2 or 3 years. And I was doing an enormous amount of surgery, and physically was having trouble keeping up because I have a bad back and all this stuff. And I was literally getting like IV steroids between cases just to stand up. It was bad, but I was making good money. But I just, I think after a while I knew that's just not where I wanted to be, because I just, I have a little bit of ADD too, and I wanted to do other things. So I ended up starting another business in the whole medical space with some, I don't have to go into too much detail, but it was like another procedure outside of cosmetics, and I branded it, created another business, got a guy working for me on the cosmetics side. And then I was like, then I was making quite a bit of money, and that's all relative, right? We always, I live in Montecito right now, like in my, my neighbor is a billionaire. So it's all relative, right? So it's not a lot of money. It means very different things to different people.
If you've listened to our show for any length of time, you've heard us talk about infinite banking and how we were able to use that concept to create over $50,000 a month in passive income. But it's just not that easy to figure out, how does this all connect into my own personal system?
Stallion, that's why we created the passive income operating system, bro. It shows you how to turn active income into passive income. It makes all the steps come together. If you would like to get access to it as a podcast listener, we've never given this away in public before, go to wealthwatwallstreet.com/PIOS. There was nothing worse than walking into class when you're in school and the teacher saying, pop quiz day. Why? Because you were unprepared. Are you unprepared though for financial freedom?
Don't be. Find out how close you are by taking our 30-second quiz at wealthwithoutwallstreet.com/quiz.
So I was making good money though. And I started investing that. and I started investing in apartment buildings in Chicago, and started doing pretty well. And I think my first few buildings, I think I sold in a few years, completely, just riding the wave of good years. And 2000, right around 2010 to 2012 and things like that, made like 500% on each one of them. And it was just stupid how much money that I was making with these buildings. And I'm like, wow, this is great. More people got to know about this. Maybe I should start podcasting because I wanted to learn more about this alternative space, this alternative world. So I started listening to podcasts. And again, that was probably around 2012.
There was like 4 or 5 podcasts at that point, right? So you just listened to all of them.
Exactly. I mean, I listened to, the real estate guys have been around for 150 years now. So I listened to Russ and those, and so I would listen to those guys. And what I found was that, not every podcast resonated with me. I had a certain situation that was different from others. I was a guy who's already making 7 figures, and multiple 7 figures. And I wanted to figure out, like, what do I do next? How do I scale? I wasn't trying to get out of a cubicle or something like that. I was just trying to figure out, like, what do you do when you make this kind of money, and what should I know? And so the problem is that most podcasts did not resonate with a very high paid professional. And so I picked and chose various podcasts to listen to, just episodes. And then I was like, you know what? I got to start something, because there's too many people making, $500,000 to $1 million a year or more or whatever, who their situation's different. And they're not interested in flipping houses. They're not interested in going out there and adding another job, right? And so part of what I do is deploy capital myself. Let's start figuring out. Let's start talking about what to do if you've already got a lot of money. And so I did. That's what I did. And I started talking about it. And this is like, again, 2012, 2013. At first I did like 5 or 6 podcasts. I think my first couple, no one was listening. So I kept like looking at the downloads, and I'm like, okay, that's 5 downloads. So that's me like 3 times. And, some other, and so I kind of stopped for a little bit. I stopped for like 6-7 months. And then I got to know Robert and Russ from Real Estate Guys, and they're like, I talked to them a little bit, and they encouraged me to, kind of get back into it. And so I did. I got back into it. But again, I didn't really have an agenda of any sort, other than I enjoyed talking about it. The same way I just launched, this other health podcast now. I don't really have an agenda. I just like talking about this stuff. So I started talking about it. And then the business came later. At one point, I started getting emails saying, hey, Buck, you're talking about this stuff. How can I invest with you? Can we do some stuff together? And then I was like, well, that's interesting, because actually I've been watching guys like, Kenny McElroy and stuff like that. And it sure seems like there's an opportunity for me to do what I'm doing at a much bigger scale. And so that's when I started Investor Club, which, I mean, seriously, who just, it's like just a little click here, join my club. Who doesn't want to join a club, right? It's a credit investor club, and people get onboarded. And then that sat there for a few years, because I wasn't going to just like raise money to the purpose of raising money unless we had some stuff that we could do. And then, over time, that group started growing, and there's a lot of people in there. It's like, 3,000, 4,000 accredited investors. And, since that time, I've raised probably $500 million and, deployed a lot. So it's grown into something pretty significant. But it started out with, frankly, just a passion, an interest, and ultimately figure out a way how to, monetize it, and also to really just, fill a void.
You've left practicing, though, as a surgeon. And
yeah.
You did that when?
2017.
2017. And so that probably required you to answer some questions of those around you, right? Like, why would you leave such a fruitful career, something that you spent so many years training to learn how to do and have been so successful in. How did you answer that? I mean, everyone who's thinking about leaving something, right, at some level is going to have to answer a question very similar. I would love for them to hear how you answered it.
Well, I think for me though, like part of it was I had an exit plan. It didn't really work very well, but I had a plan that made sense. And the plan was, I had these medical businesses and that sort of thing, and I was going to move. That they were in Chicago, and I said, I'm moving to Montecito in next year, and I have to figure out how to do it. And that literally was how I did it. And if you go back and you listen to my podcast, and I think it was sometime in 2015 or 16, I'm doing a podcast from a beach house in Montecito that we rented out just because it's beautiful here. We love living here, right? And I was married at the time. And I said on that podcast, I'm like, okay, I'm moving. I'm not sure how I'm going to do it, but I'm moving. And I'm saying this out loud to you on this podcast. I'm moving here next year. I'm moving here. And I just made it happen. And sometimes you got to do that, right? Like sometimes you just think about how, if you really want to do something, think about how many times in your life you really wanted to do something and you sat on it for 3 years. And then you finally ended up doing it. And then you're like, damn, why didn't I start 3 years ago? This was exactly what I wanted to do. And I just wasted 3 years just mulling it over, right? And thinking about it and think, gosh, maybe I should just do that. I started thinking about real estate syndication probably back in like 2013 or 14. And the real estate guys were talking about it on, they had their shows and their get-togethers and stuff like that. I started thinking about it then. I didn't start doing it probably until 2016 or 17 maybe. Probably 2017 in earnest. And there's a $500 million between 2017 and now. And that's like, think about that 4 years of time where I wanted to do it. I was thinking about doing it and I never pulled the trigger. So I would say this is that if you really want to do something, like just do it. Okay. You'll figure out the rest later. Like, for example, I wanted to also launch this podcast because I have an interest in this space, this health and longevity space. And I don't know where it's going to land, but I spent probably a year and a half just going, I really want to do it. I really want to do it. And then I started thinking about what happened before. And I was like, just launch it, figure it out later. That's what I did. So now I launched it, figure out later. So I'm not a huge fan. I know people, who are business school types and stuff, they have to have everything written out. They have to have I'm not saying you shouldn't have a lot of things planned, but to a certain degree, like just start doing it, right? Just start doing it and you'll figure it out along the way. You're going to make mistakes no matter what. It's guaranteed. I don't care how much you plan. It was what Mike Tyson said, everybody's got a plan until you get punched in the face. You're going to get punched in the face. Guaranteed. Every single time. And you just have to figure it out. And for me, it's worked out.
So, Stallion, I made a comparison prior to press and record that I was very similar to Larry King for not being prepared. Now I feel like I can say I am similar to, brain surgery and cosmetic surgery because of just my ability just to do things and not be prepared. Like, I mean, this is, you're giving me all sort of, momentum and conversation with my business partner here. So let's transition into this next phase of life, right? Let's talk about now that you are a syndicator, you are raising capital, you've raised $500 million, which is an amazing feat in of itself, which should be surprising based upon all the things that you've done to that point. Talk about some of those insights, those learnings that you've had since doing that, right? Since being in a different position, you've been investing your own money, but now transitioning to a point where now you're investing others' money. What are some of those learnings?
It certainly, and that's an ongoing, learning process. I mean, the process never ends, right? And I think you become more and more you become more and more careful as time goes by. You see like also what's happened in this space. It's tricky. You have to be very careful. Your partnerships, the people that you're entrusting with your own group's money. There's two elements to that. One is, certainly you want an operating group that is, that's competent. Nothing's going to ever guarantee you, wins every single time. Like, you're just not going to win every single time. We went through, from and investors went through, real estate investors, I went through 2011 to 2022, which is like the longest bull market in history, where everybody and anything that put money into, real estate was a grand slam. Everybody looked like a genius, right? We're not in those spaces anymore. And so sometimes you take your lumps. And so you're going to do that. But I think part of the process is trying to figure out what you do next, right? If you have some situations that don't go as well as you thought, what do you do next? And so that's been an ongoing thing for me, trying to understand, like, okay, if things didn't go well, why didn't they go well? And how can we make sure that we continue to improve next time? Real estate syndication is like anything else. Like it's a business, right? It's not really real estate at that point. It is real estate. Real estate is a product of it, but real estate at that level becomes business, becomes a big business. And you have to figure out how you manage that business right. I also would like to say, in terms of the concept of raising capital, that, it's a tricky space, right? In the podcast ecosystem, especially, like we've seen in this space in the last year or two, where it's not just about necessarily the market forces, but there's been downright criminality with Ponzi schemes, and it's hard enough to make money. It's hard enough to consistently make money just with people who are good at what they do, right? Because you still have a market, you still have market forces. But when you're trying to like actually avoid criminals, that makes it like 10 times more difficult. So one of the things that I do is I used to podcast with a little bit more, I used to be a little bit more free with who I would interview, right? For example, even though I'm not a big fan, I used to do like oil and gas stuff, right? Now, oil and gas, my experience has not been a good one. I've never made money, and then there ended up being some very, again, some criminality and stuff that was going on through the ecosystem. That was an area that I was like, okay, well, now I can't really interview anybody who's raising money for oil and gas anymore, because I'm not there every day. It's not my business. So you guys know this too, Russ and Joey. The second you interview somebody, people who listen to you, who trust you, you will legitimize that person, right? And that's a very dangerous situation to get into, because like we as podcasters, we need content. We want content. We like talking, but we also can't know everything about everyone we interview. And that is very challenging. And so probably the biggest impact on this whole, market and what's happened in the ecosystem for me is to be, frankly, like kind of scared about who I interview, and just, really try to stick to macro concepts, really try to stick to personal finance strategies. And if I'm not involved, deeply ingrained in my own, in what I'm raising capital for, to the extent that I'm actually a managing partner, or it goes through our associated broker dealer, I'm not going to interview that anymore. That's something that I've learned my lesson on.
Well, it is a very scary world to try to learn all of those things. And you have to find people that you trust in that world. You have to try to do the due diligence. But to your point, I mean, there's a lot of people that have trusted I think it's 40 to 50 Ponzi schemes that pop up every single year, right? And most of those people were very trustworthy on the surface. And most of them fairly intelligent and could communicate something. But yeah, it is definitely a challenge, and that's why I asked the question about raising money, right? Like therein lies the next phase for most people. Is once they do it well for themselves, they decide, okay, well, how can they decide mostly because of others coming to them, like you had with you, how can I invest alongside of you? And the question is, how do you do it well? And it's hard to do it well. That's really the answer. It's that you have to treat it like a business. You can't treat it as a hobby. You're going to have to go all in. And I can see why you would have to leave the career that you were in to focus on this, because otherwise you would be divided in your process, and we can't do two things well.
You also have to know what your kind of limitations are. So like, for me, real estate is like, it's what I understand. It doesn't mean that I'm going to, it doesn't mean that it's a guarantee. Nothing's ever a guarantee, but I can say with some level of certainty that if it's real estate, I'm gonna, I've got as good a shot as most people to make people money, right? But for example, there's other things in this space that I think have a lot more moving parts. And so I've moved to a broker-dealer model on that. In fact, my brother used to manage the sovereign wealth fund of Bahrain. So he's a very smart guy, multi-billion-dollar asset manager. And so, I'm partnering with him on that. So if there's things that are outside of real estate, goes through him. I have no idea. They bought half of McLaren for multiple billions of dollars on his watch. So he can deal that stuff. I'm not going to do that stuff. So we just have to you have to know what you're strong at. Make sure that you project that and give everybody the best shot possible. And I think that's philosophically where I'm at.
Well, I'll tell you the biggest things that I'm hearing from you today, Buck, are that you have to know who you are, right? As an investor. Are you an entrepreneur? And if you haven't woken up to that possibility, then maybe you need to invest with some really good operators. And so for that, I think it's wise that you're also sharing that you're gonna operate in the places that you know, and that maybe that's a takeaway for everybody today is, man, who are the operators you're working with, and do they operate in the places that they know? Like that's a good due diligence question to go deep with before you ever give them $1. And I'll just tell you what, Buck, I can't thank you enough for being on the show and being willing to come today. For those who would like to learn more about your story and what you're up to, where would you want us to forward them today?
Well, always happy to have people, follow the podcast. It's Wealth Formula Podcast, wherever you do podcasts, and wealthformula.com is the website. It is the show itself is purely educational, personal finance stuff. So especially if you are in that sort of higher wage earning capacity, that it's probably stuff that will resonate with you. And even if it isn't, there's certainly bits in there that are of interest. And, we really focus a lot on a lot of the things outside of investing that are surrounding personal finance, like tax mitigation. I mean, that's why Tom Wheelwright and I are so close, because we do we talk a lot about what he talks about, but sort of more on the investor side, asset protection, estate planning, all these things that people need to know about. So
I love the holistic nature of that. And Wealth Without Wall Street Tribe, you've heard it here today. I pray that this helps you on your journey to financial freedom, whether you are the entrepreneur or you are entrusting your hard-earned money with the operators who are going to help you on that journey. So if you found value today, if you'll please go and rate and review the podcast and share it with a friend who also needs to be on the same journey as you. Have an amazing day.
This has been the Wealth Without Wall Street podcast. Don't forget to subscribe to the show to break free of the Wall Street mindset and begin building wealth on your own terms in places you understand so that your wealth will never run dry. See you next episode.